Hello and welcome to CTRM Radio, a podcast hosted on CTRMSenna.com and ETTSenna.net, created by Commodity Technology Advisory. My name's Gary Vasey, and today in this episode I'll be talking to Quoreka's Harry Knott about trends in energy and commodities and how that's impacting software requirements for ETRM, CTRM, risk management, that kind of thing. And we also talk about how Quoreka is doing and how it sees the market. And here's the episode. What are you hearing from your customers and prospects in terms of functions and features for a CTRM or a CTRM-like piece of software that really are driven by business and technical trends in the market?
Yeah, no, I think it's a fair question. Because I think when it comes to, AI is obviously a big one from a technology trends to talk about. I think there are a few different angles to that. One is the kind of fundamentals of the underlying markets. So there's a big boom, maybe bubble in AI generally, which is feeding into technology and infrastructure and power because it's very intensive for all of those things. And that's been heavily invested recently. So people have a lot resting on that. And that obviously has a knock-on effect on power markets, any of the underlying things that support that power requirement, battery storage, cabling, infrastructure, all those sorts of things directly. But then also in terms of where that's applicable, I think looking at it from the point of view of forecasting and prediction, stuff like that is something that I'm sure there are plenty of people and plenty of trading desks looking at. But from a software vendor point of view, that's really not where we put most of our effort. We're looking more about optimizing the logistics side of things, improving efficiency, spotting things, finding problems before users find them, parsing data coming into the system from sort of non-machine sources, inbound documents coming in to our system, pulling out data to extract it to save effort from manual processes. So we're seeing a lot of that in terms of sort of optimizing and improving performance and reliability and spotting errors is a lot of where we see the kind of biggest bang for buck for our customers in that space. The exciting thing is to have your kind of super whizzy algo trading thing, pulling stuff off these models. I think that's a different part of the market, and often that's on the client side rather than on the vendor side of things for all those things. So that's an area. We've done a fair bit on this year. I think that's only going to increase next year. I think across the market more generally, the way of those sorts of trends of things is you have a lot of big announcements of people doing this big project and that big project and this thing, that thing. There'll be certain things which are successful. I hope a lot of our initiatives fall into that category. There'll also be a few things where people spend a lot of effort on it and actually then realize towards the end of it that, it's probably not going to deliver enough value to justify what they're doing to it, and kind of quietly wind that up.
Yeah.
And I think the kind of extent to which the AI sort of trend in the market becomes, if we see a lot of success stories, that might continue to push. If we don't see enough of the success stories and we see more of the kind of big spend and not enough outcome, then you risk people starting to go, okay, maybe this is overblown and we need to start scaling back. And at that point, maybe you're looking at a burst bubble.
It's all about the hype cycle.
Yeah. And I think calling what the impact is going to be is a really interesting one for this, because in some respects there is huge potential for things to be an absolute game changer in the entire economy. So there's huge potential for it, but there's also there's limitations in a lot of areas which kind of limit the reliability, I guess. So for things where you want to produce output that is broadly right, and that will kind of serve your purpose. You want to create a picture, or you want to spot things that are likely to be problematic. Those are things where you don't have to be 100% right, and you can get a lot of value from it. But for things where you have to be able to rely on it, that's where the sort of thing tails off without a lot of extra work. And those are the things that I think are still sort of beyond the reach of a lot of the models at the moment.
Yeah, I'm still expecting to see governance issues, and to some extent, the application of AI poses a risk as well that needs to be considered, because is it as reliable? I mean, is it hallucinating? Is it downright lying, which I've seen examples of? So and also, is it plagiarizing? And is my data secure? Am I inadvertently sharing my private data with the world? So I think there's a lot of governance and security issues that may pop up along the way as well. Are you seeing sort of like everybody on the customer and prospect side looking for AI, or are you seeing also some with reservations around those sort of topics?
I think everyone is asking the question. Some with more sophistication than others. Some people are very on top of the kind of legal side of things about whose data is used in the model and what happens to my data if you feed it into this, whatever, and rightly concerned about some of that stuff. But in terms of asking the question, some people just want to know what you're doing and see if you've got any good ideas, whereas other people have some more specific ideas about what sorts of things they want to see. And I think those specific ideas in some cases are, valid, in other cases are a little bit sort of pie in the sky. Can you use AI to solve this problem? It's like, well, not really, because that's not really an applicable use for that type of technology.
Right. So moving on from AI, what else do you see out there?
So, I mean, there are the more mundane things that we see out there in terms of things like e-invoicing. Digitization of things generally, I think, is a broad trend and has to be the way that the market has to go. I do know every time that I say this and talk about this stuff, that's been the case for a long time, and things move incredibly slowly. Obviously, as soon as there's a regulation that actually comes into force with a target deadline and is enforceable, that does kind of firm up that something has to happen.
Mm-hmm.
So I think we're seeing now with e-invoicing coming in the EU, for example, where people are going to have to start producing e-invoices and have electronic exchange for that type of information. That will mean that people start doing it because they have to start doing it. And I think in some cases it's going to be a sort of bolt on after the as a kind of afterthought, as an analog to whatever they're doing currently. But obviously, thinking about those sorts of things, if you started with an electronic system, you'd obviously start with a completely different thing to the way that people do things today. So
Yeah.
we're kind of working back and trying to get back to the end state that you would have got to if you started off with something electronic in the first place. So I think the whole idea of that information is electronic and remains electronic through its entire life cycle is going to start to become more and more the way that people have to look at things. So rather than saying, the information starts off in a system and then it goes onto a paper document and gets sent around and signed and scanned and whatever else you do with it, and then goes back into a system at the other end, that whole existence on paper really shouldn't belong anywhere at all, and really has to be expunged in the long term. It'll take us a long time to get there for different types of documentation, but obviously anything that comes into force for a regulation will have to move quicker than things that
Right.
that don't.
What about risk? Because with all the volatility of the last few years, and all of the geopolitical exposures out there, surely people must be looking for things that involve various forms of risk, right?
Yeah, I mean, I think risk and the timeliness of data and the timeliness of risk metrics, risk measures, is only going to become more important. The rate of change of things geopolitically, as well as in the market, just means that you have to have access to the data when you need it, and whether that's something, you've got everything in your system, but you need it to be more responsive and you need it to be able to churn through whatever figures you want to get out more quickly. That's one aspect of it. So each individual system has a higher demand on performance, sophistication, and availability and timeliness. But there's also the other aspect of it, that in a lot of cases you're not just dealing with data that comes from one system, you're dealing with an ecosystem where you're pulling all sorts of bits of information from disparate sources, and there your kind of limiting factors are not necessarily the system that does the calculation and the aggregation, but the availability from the source systems. And that's often the biggest limiting factor, where you're dealing with something which is pulling data in from a lot of different plants or locations or trading
Mm.
units in different geographies. So I think on those two things, so quite a big theme for us this year, and that's going to accelerate next year, has been the kind of central risk functions and making them accessible within our product ecosystem. So we have a number of different products, all of which need some measure of risk, and we have a lot of kind of functionality that we want to make sure is accessible within our other products. But similarly, that could be making it accessible to customers who use 2 or 3 other systems, or their own in-house system, or a third-party vendor system.
Right.
Someone doesn't have the kind of real-time valuation, risk, stress testing, limit monitoring capabilities, and they need to plug that in. So architecturally, I think the kind of 2 big things there are making sure that you're connected and connectable, so you can pull in prices, at whatever frequency is needed from real time to, when someone wants to see what happens if. People can pull in trade data from one source or multiple sources. People can apply their own things to that as well. And then within the engine itself, obviously, it has to be capable of covering all the sorts of metrics that people want to be able to get out of that system. So you want to be able to see, risk positions. You want to be able to say what happens if this moves or that moves. You want to be able to see your position, in different scenarios just as easily as you can look at your current position.
Quoreka is obviously known to be strong in a couple of areas like metals and I guess eggs on the Eka side. Are you seeing any trends in either of those spaces where the sort of shape of things is changing? Like for example, on the egg side, maybe people are trading more what I call unlisted commodities like herbs, spices, tea, physical trading and looking for solutions, or in metals, maybe are we seeing more trading of maybe different types in metals that are associated with electrification, for example? Any of those trends influencing things?
Yeah, I think, on the metal side of things, all the suite of, first of all, battery metals, anything involved in production of battery materials, and also in the supporting infrastructure, so wiring, cabling, etc. I think there's going to be pretty strong demand in those areas as well. Some of those things are not terribly sort of liquid in their underlying terminal markets, so the trading for those things is a little bit more tricky than some of the more kind of liquid, long established products that people are trading in higher volumes.
Mm.
I think in terms of kind of things outside the norm that people trade, what we do see in our systems, it always amazes me when I look at it, is people can start trading new things because our system allows them to create the setup data for whatever they want to trade and put the data in. You kind of get an idea that someone's trading all the basic things that that they're trading: base metals, precious metals, ferrous, non-ferrous, whatever it's going to be. And then if you take a look at an example of what they've actually got, there's a whole kind of tail in a lot of cases of things which are at the smaller end of the scale. So obviously lower volumes because there's not as much of it, but going down into the alloys, the minor metals, the composite of various sorts that you probably wouldn't even think of if someone asked you to name what was going through your system at the time. So I think there's a lot of that, whether it's kind of different grades of a similar product or things which are completely niche and not widely traded.
So what about on the bulk commodity handling side? Because I know that Quoreka has some rather interesting and sophisticated software that's very specific to that space. What are you seeing in that area?
There's a huge amount going on in that space. I'm a lot less directly involved in that, but sort of outside the commodity trading and risk management software systems, of which we have 2 or 3 different ones that are kind of very active. The bulk solutions really cover all sorts of things around stockyard management or silo management. So these are things which are in ports and facilities to actually manage the flow of material into and out of the facility. So that's complete integration with the hardware, complete automation of everything. They have some very smart things that maintain a virtual twin of the stockpile, for example. So if you've got a stockpile with iron ore coming into it, and you want to be able to look at what you'd need to take out of that to fulfill a shipment with whatever specifications, it knows exactly what's gone into it, and it can very, very accurately tell you and direct machines to where to take material out of the pile to be able to achieve, the closest to the target specification without, risking going under and being penalized, without risking going over and giving away quality that you could have been paid more for. So that's something that we're seeing a lot of activity kind of globally now. Obviously, that part of the business really started out in Australia and is very strong in Australia, but we're seeing a lot of opportunities much more globally around for that as well, which is great. And for me, it's also really interesting because it's outside the normal
Yeah,
CTRM scope of
yeah,
software. It's actual stuff dealing with the actual
yeah.
machinery, which is great.
Yeah, it's interesting. As you know, I spoke to one of your colleagues over there and learned a lot recently. It was a fun interview. Quite different to the usual, mundane CTRM stuff. So
Yeah,
we've mentioned digitalization. We've talked about what about regulations? Do you think we're entering an era of continually increasing regulation, or with the Trump administration and the EUDR, let's call it debacle? Do you think we're maybe seeing a bit of pushback towards regulation, and will that impact things on the software side?
I think. Yeah, I mean, look, there were going to be new regulations coming in different areas that you see. I think some of the things are kind of well established. There are a few things changing in the EMEA refit space. That stuff which is still continuing to evolve. A pushback on that. I mean, regulation tends to kind of lag behind and slightly misdirect whatever it does or doesn't do. So um, probably things will get dropped at the point where you most need them, having established most of the things that they were put in place to try and control. Um, I think, we, in terms of what we're doing actually a fair bit on some of our regulatory reporting tools again to make them more open and accessible and automated. That's more kind of business as usual, just for the existing regulation to make that more streamlined. And again, for things like e-invoicing regulation, that's some new stuff coming down that we're kind of actively plugging into.
So in 2026, what might people see coming out of Quoreka that you can talk about at this point in time?
So I think one of the things that's most exciting for me is some of the integration, or in fact, not even, it's the extent of integration that we're seeing, or integration opportunities we're seeing between our different systems. Because often you kind of acquire different software companies, they all have their different systems and they all kind of do their own thing. To a large extent, they can continue to run completely standalone and do whatever they carried on doing, which is not necessarily the worst outcome, but it doesn't make the whole more than the sum of its parts.
Right.
What we're seeing at the moment is we've got a lot of projects and a lot of discussions about areas where we can make use of functionality from one system to benefit customers of another system. And that's great from our point of view because it means we can reuse more of the software that we build, and it means for our customers' point of view they have a lot more stuff to choose from because you're not limited to the stuff that was built in one particular place. So I think those things, and that's where really all the kind of underlying work that we've done for opening up the systems, for APIs, for interoperability, for pulling stuff into a common API and UI framework, that's where it really starts to pay off, because you can say, okay, well, you're on this product, you got that system, you want a feature from one of our other systems, either it's already accessible and you can just plug it in and operate that as a component, or if it's not, we've got a template for how we pull that stuff up, wrap it up and expose it. So even if it's not available today, we've got quite a short turnaround for actually making that stuff available. So I think that's an area where we've done a lot of underlying work to get to the point where this stuff is a lot easier, and we're seeing a lot of demand for that from existing customers and new customers as well, to actually make use of that stuff. So I think we're going to be seeing a lot more of that stuff coming out in 2026.
The thing for me is that these markets are obviously dominated by North America, Europe, and to some extent Asia Pacific, depending on what you're looking at. And yet, South America and Africa are emerging regions. Do you see much Are you seeing more interest there, for example?
A little bit in South America. So I'd say that's more active for us than Africa at the moment. I
Right.
think a lot of our customers have, there's a lot of customers with kind of operations in Africa, but they tend to be headquartered in
Yeah.
Europe or North America. South America is more kind of directly active, well, I guess metals and agricultural commodities as well. And just thinking about the commodities that we're seeing, we've talked about metals and ags generally, but we've been doing more in oils, crude,
Okay. Well,
various liquids.
let me ask a quick question there then. Let me think. So outside of your traditional metals and ag space, how is it going in other areas? Because obviously with the price of crude oil down, the US dollar a bit weaker, and a glut on the market, you might be tempted to think that things would slow down there, but we've seen quite the reverse. I think generally that there's been a lot of activity in those markets.
Yeah, I think for us, what we've seen more, so we've been more active in sort of energy liquids. I'd say probably less in the kind of basic crude oil,
Right.
but more in areas around that. So in products, everything through to in the oil and gas space, LNG, LPG, some of the other oil products or the liquid products in that space. We've definitely seen more activity in that area. We're generally not typically the kind of pure, crude oil system
Yeah.
provider. I think that's something that we've never really focused on as a market by itself. But we've seen a lot of people coming in from other ancillary markets.
How are things going generally for Quoreka after bringing the two companies together and looking at the products and how you go forward into the market?
I think we're in a good place now, actually. I think we've kind of hit the point where we've got over the bulk of the kind of integration, teething problems, both from a sort of organization and a technology point of view, working out what sits where, who does what. I think the organization structure makes a lot of sense now. I think the teams are pretty well integrated. So we've got people working, across both sides of the product lines, and also geographically, we're able to make much more use of the wider organization. So I think from that point of view, I think we're in a good space. And I think in terms of the kind of things that we're seeing going on that kind of involve people from multiple products, I think we're seeing a big spike in that. And I think that's a really good sign of health in the organization, that we're able to pull bits of software across and make use of them for different other products. So we're getting value out of that. We're making use of people being able to move from working on one product to working on another product when we have needs in another area. So it's not the easiest thing to do, but it's something we've successfully done quite a few times with a few people in the teams. So I think it's in a good shape. I think it was quite a big job to put the two bits of the companies together, and obviously any merger is a difficult thing to organize. But I think right now, touch wood, I think we're in a good place.
I'm looking forward to a good 2026, basically.
Definitely, yeah.
Okay. Harry, thanks a lot for taking the time. Appreciate it.
No worries, Gary.